Hello, everyone, and welcome to the Mainstream Mortgages podcast. My name is Colton Boudreau, and I'm here as always with my business partners, Peter Paley and Derek Vandell.
Hello.
So today's episode is about HELOCs. We're going to jump right into it. Derek, what is a HELOC or a home equity line of credit, I should call it?
Yeah, a home equity line of credit. If you know what a line of credit is, it's basically just that, except it's secured to the value of your home. So just like a mortgage is secured to the value of your home, the home equity line of credit is secured in the same way.
Peter, so what's the difference between your standard mortgage and a mortgage that involves a HELOC?
A home equity line of credit is a revolving credit facility. That means you can draw it down and pay it off and draw it down again and pay it off. So it's a different kind of charge on your land title called a collateral charge, just meaning you can reuse it over and over again. And the advantage to a home equity line of credit versus a credit card or personal line credit is typically the rate. The rate is usually the prime rate plus 0.5%. Sometimes it's better and sometimes it's a little worse. It all depends on the lender, but it's way better than paying 9, 10, 11, 12% on a personal line of credit or 19% or 28% on a credit card.
Right, and that makes sense. So how much can I borrow in my HELOC then, Derek?
It depends on the value of your home. So the maximum amount that you can borrow through a home equity line of credit is typically 65% of the value of your home whenever you apply for that line of credit.
Peter, you mentioned that they're cheaper than credit cards or just a personal line of credit. What kind of rates are we looking at for a home equity line of credit?
Well, it's just usually about prime plus 0.5%. So currently it'd be about about just under 5% for a home equity line of credit, which is really cheap money when you compare it to unsecured lending.
And so if prime were to change, then your rate would change, like depending the balance on that home equity line of
Yeah,
credit,
it's
your amount could
completely
decipher.
variable. It would go up or down depending on the prime rate set by the Bank of Canada.
Right, which would be a risk to some people, right?
100%.
Yeah. So Derek, how do you pay, like, say I got a $50,000 balance on my line of credit. How much am I paying a month? Is it interest only? Is it like a credit card, or am I paying, is it going towards the principal?
Yeah, it's kind of like a credit card. The interest is charged, I believe, on a daily type of basis based on the balance that you've used on the line of credit. So the more you use, the more interest you pay. And there's always going to be that minimum interest payment per month that will be required. A lot of the times it's not even enough to kind of, well, actually, I'm not totally sure, but usually it's enough to cover the interest, right? But not always the principal of what you're borrowing on that line of credit. So it is a good idea to, I guess, try to pay more than that minimum if you can.
Derek, again, what would I use this HELOC for? Like, what would be the reasoning to get a HELOC?
Um, there are a lot of good reasons. I mean, you can use it just the way you would use a credit card. You can use it for pretty much anything, but a lot of really common uses would be for a down payment on a home. If you've got, a lot of real estate investors like HELOCs because they can, draw down from the value or the equity from their rental property to buy another rental property, right? So that's one big use for a down payment. You can also use it to consolidate a lot more expensive credit that you have. Like if you have a lot of credit cards or, a loan with a high interest rate, you can use your home equity line of credit to pay all that off, and it's a lot cheaper, as Peter was mentioning.
Jumping in with something too, because when you get to my age, like sometimes you're not sure what you want to do in the future, but you want to have access to some cheap money. So setting up a home equity line of credit allows you to tap into your home equity at any time and use it maybe for renovations, or maybe you want to buy a car, or maybe you need to fund some educational expenses for your kids or grandkids or nephews or nieces or whatever. So having access to your home equities, kind of a good plan or a good way to set up for unexpected future needs and getting it at the cheapest money possible. And what like I like to tell our clients sometimes is, yeah, it's a really good idea to set this up because if something bad happens, it's harder to get approved after the bad things happen. It's a lot easier to get approved now when things are good and prepare for the future.
Right. So there's a lot of positives to obtaining a HELOC, and it can even just act as a safety net, as you mentioned, in case of any emergency, in the form of cheap money, essentially. So with all those positives, are there any negatives to having a HELOC on your house, Peter?
Well, I think the negatives really are a personal kind of thing. Like if you're not a good saver or if you have 20 bucks available room on your balance and you're going to go spend it, probably not the right product for you. But the really nice thing about having a home equity line of credit, and I think we're going to probably talk about the different kinds that we have in the next little bit. So I don't want to jump too far ahead of myself, but it's really for the right kind of people. I would say like strong credit profiles, well budgeted, not big spenders, um, or or people who just really need some relief because maybe they have a big bill to pay. Like for example, like we're self-employed. If we ever have a big income tax bill, I know I have my home equity line of credit there, so I can just write a check if I ever needed to. So I think those are what it's for, and who it's not for are people who can't budget properly.
So you kind of answered two of my questions there. So that
God.
I'm just gonna no, it's okay. So I'll just stay with you. And you mentioned the different kind of products or different kind of types of HELOCs that different financial institutions or monolines offer. Could you elaborate on some of those?
Yeah, for sure. So we have five lenders offering home equity lines of credit products right now. We have Scotiabank, TD Bank, CMLS Financial. We have the MCAP's Fusion product, and then we have the Manulife One, and they're all completely different. So the benefits and features of each one are a little bit different. So the two big bank ones are pretty standard. You get your mortgage probably in first place and then you get a home equity line of credit added, and you can just use it as you wish. Maybe it's like we already said to save interest or for future use. CMLS has a cool product where you might use it in two different ways. You can transfer your mortgage over from your current lender and probably get almost an insured mortgage rate if you have enough equity built up in your house. And we'd have to explain that to you when you call us. But you can also add that home equity line of credit in second position to either make your mortgage rate cheaper or to have for future expenses like renovations. Like I know the one that we just did a month or two ago was to finish renovations, but they didn't want to necessarily refinance their total mortgage yet. And then we have the MCAP Fusion, which is really cool for people who want to maybe refinance or purchase a house and don't have enough equity for a home equity line of credit. That home equity line of credit can start as low as $1. So as you pay your principal down on your mortgage, you have instant access to all the equity you built up. So over 5, 10 years, you're building up like a ton of equity that you can use in the future. And like Derek said, maybe you're going to use that for a down payment on a rental property, a cottage, and all the reasons that I already listed. And then finally, there's the Manulife One, which is everything rolled up into one account. It's your checking account, your savings account, your mortgage, and your line of credit all in one. And it's probably its own episode, but we do have all these options available for people who are either purchasing or refinancing their house. And in the case of the CMLS product, it's perfect for transferring or switching lenders.
Yeah, I just want to jump in there on the CMLS product. I just recently did one where up for renewal, after his 5-year term, thinking about renovating the house. So we actually transferred over the insured mortgage at the insured rate, so the best rates, and put a HELOC for 100,000 behind it. And it was easy, it was smooth, and he might never touch it. He might never do those renovations, but it only costed him about $800 with the appraisal and the setup fee. Like, how can you go wrong?
Can't
Even
go
if you're
wrong.
Yeah, if you're using it for the renovations or you're using it for an emergency, like it's a no-brainer in my opinion. Really good product. Derek, do you have anything else to add about HELOCs?
I think Peter did a really good job of
Yes.
covering everything.
Yeah.
Yeah, I don't have anything to add.
Home equity lines of credit are my jam. If
Yeah.
I'm giving you a mortgage refinance, I'm really going to talk to you about this option to see if that's something that's going to be appropriate for your situation. And I also wanted to mention just another product that we have too for people who do have bruise credit and maybe do have like that 20, 30, 40% interest rates on credit cards or things that need to be paid off. We have an excellent product through one of our alternative lenders, Home Trust. It's the equity line of credit Visa, but they attach the Visa to your house. It's only 10 or 11%, which I know when whoever's listening to this seems high, but if your credit's bruised and the banks are saying no and the credit unions are saying no, this might be a really good product, one, to rebuild your credit, and two, consolidate a lot of high interest rate credit into one easy, more manageable payment. And that's going to allow your credit score to heal. I know we did one last summer in 2025, and it was really the customer's only option, even though his credit file was good. He just had too much, like he was managing everything, but it was just too much. And this was a product that allowed him to just put it all into one and focus on it right away. So I just also wanted to mention that we do have a home equity line of credit product for alternative credit borrowers.
Perfect. So if you guys don't have anything else to add, I think that would be today's episode. Last chance.
But believe it or not, I'm good.
Perfect. So as we've kind of established throughout the episode, a HELOC can be a very powerful tool for our clients. If you have any questions or concerns about them, reach out to us at 431-482-2187 via text or phone call, or you can email us at greatrates@mainstreammortgages.com. So as always, thanks for listening, and we will catch you on the next episode.
Thank you.